Today I'm going to be talking about something really important, and it's classifying whether you're a share investor or whether you're running a business as being a share trader. Anyway, let's get into the video. Hello everyone, my name is Ethan Rushock, and on today's episode I'm going to be talking to you about share investing versus share trading. So they might sound pretty similar to you, but I'm going to touch on whether you're classed as an investor or a trader, what the key differences are, and how to determine this. And this goes for share investing and crypto investing. So they've got the same set of rules there, so if it applies to one, it'll apply to the other. And I'm just going to go through those key differences because it's really important to determine which one you are, because they have different tax treatments and different things you need to know on ways that you may be able to save yourself some tax. So first I want to talk about share investing. So when I'm talking about share investing in this video, I'm talking about longer term investing. So the ATO here on their website, they talk about it and they deem it as share investing is when you're investing to get a return via dividends or other means. So I think this is a little bit misleading because it's not just going to be dividends. Not all stocks pay dividends, but you might buy, for instance, Afterpay at the moment. Now they don't pay a dividend, but you can still be a share investor for the long-term gain of that, and you're going to get it via long-term capital gains. You're not a share trader, you're still an investor. So with share investing, the sales and purchases of the share aren't assessable income or deductions, rather it will be the capital gain or loss that you make that will become assessable. So pretty much you'll pay tax on dividends or any other income you receive from them, and then you'll pay tax on the capital gain. So it's quite simple to keep track of because you know that it only becomes an income event when either you receive a dividend or when you actually make that sale and make that capital gain. Now obviously you could end up making a capital loss, but a capital loss can't be deducted against your other income, only future capital gains or current capital gains. So that's just something to keep in mind, which we'll talk about when we get into trading, which is a bit differently. But with investing, capital losses can't be deducted against other income. And so transaction costs such as brokerage, they're not a deduction either. Again, they are taken as a cost base that when you do that capital gains calculation, they'll be factored in then rather than being able to be claimed against other income ongoing. Now you can claim a deduction though for costs against earning dividend income, for instance. So if you've taken out a loan to get shares and you've got interest on that loan, that interest will be a tax deduction and it'll be claimed in each year. You don't have to wait until you sell and use that in a capital gains calculation. It's calculated each year and it is a deduction against your dividend income. So the biggest advantage with long-term share investing is you're eligible for capital gains discounts if you hold for over that 12 months. So that can make a huge difference if you're making big gains on long-term holdings, so over that 12-month period, because then you're getting a 50% discount on those gains. So that's one of the main advantages of being classed as a share investor. And obviously because you're paying the tax when you sell, it makes the timing of sales really important. So you don't want to be stuck where you're made a big gain off one share and sell it in a financial year and you're holding a massive loss and you recognize it just after the financial year and you can't offset that against the gain. So timing becomes really important, and it's really good idea to have your head around all of your portfolio, where all the positions are at, especially as you're coming close to the end of the financial year. All right, so now I'm going to talk about share trading, and what we're really talking about here is running a business of share trading. So I'll refer to it as share trading, but really it's, in essence, if you can start thinking about of running a business of share trading. So it's treated very differently and it's treated more like a business. So pretty much when you purchase shares, that's going to be an expense. When you therefore sell the shares, that's income, and then the dividend income is obviously also assessable income. But the main difference is the balance of your shares are treated like trading stock. So what will happen is that you will pay tax on gains even when you haven't actually sold a stock, and same as a loss will be recognized before sale, because pretty much what's going to happen, you're going to have income, less purchases, and then it's going to add back your current stock. So you can see that you're going to pay tax on a more regular basis because you're going to be paying each year, not just on sale of share. So this is really important to understand if you're doing share trading, is that if you're in a profitable position at 30th of June, that profit will be recognized in that year. So let's go through an example here and say you've purchased shares for $5,000 and you've sold $2,000 worth of them, but you're still holding $8,000 worth of them. So what's going to happen, you're going to have $2,000 of sales, they cost you $5,000, so it might look like technically you're $3,000 in the red, but then it's going to add back that $8,000 that the holding stock's worth. So you're actually going to have that gain of $5,000 recognized in that year. So this is very different to share investing, because with share investing, like I said, you're only going to pay tax when you actually sell all of those, not on the gain as at 30th of June. So it's something you really need to keep in mind when share trading. Is a whole different ball game when it comes to tax. So as you can see, we talked about timing is really important with share investing. Obviously with share trading, timing doesn't matter because you're going to pay tax no matter what, depending on the position you're in. So it's not going to matter if you sell on 30th of June or 1st of July, because you're going to pay tax because that's going to be holding at the 30th of June at that value, and it doesn't matter if it's sold or not sold. Now, the biggest disadvantage with share trading is you're not eligible for capital gains discounts. But when I talk about the differences, which I'll do soon, you'll see that you're probably not going to run into that situation too often, because you're not going to be holding things probably for longer than 12 months quite often. You're probably going to be turning things over more regularly, and therefore you wouldn't be eligible for the discounts anyway. Now, one of the big advantages with share trading though, is that losses can actually be offset against other income. There's a few different things you've got to meet, but you can offset losses against other income. So because you're running a business, for instance, if you are working as well as a wage earner, you could offset losses that you make in your trading business against that income, which could result in a good tax refund. Now, obviously you don't want to be in a loss position though. So I think people get caught up too often in all things, whether it's rental properties or running businesses, of going, oh great, I make a loss, I can claim that. You still rather make a profit. So just keep that in mind and don't get confused and go, oh, loss is good because I'm saving tax. You're actually losing out in the long run. Before I get into determining if you're an investor or a trader and how to work that out, if this is your first time here or your 50th time here, I really appreciate it. If you can hit that like button, it really helps me get this video out to more people. And if you haven't hit that subscribe, smash that button and let's get back into the video. So there's 4 main factors that the ATO have on their website here, which have been used in court cases in the past to help determine whether it's investor or trader. So I'll go through them. So the first one is the nature of the activity. And that talks about, are you running it like a business? So obviously you need to have an intention to make a profit. Now, that's not going to be the determining factor, because an investor and a trader probably both have the intention to make a profit. Well, they should. But it's going to be things like, do you have a business plan? And are you treating this like a business? Or is it just a once and done, oh, I've invested there and I've got no plan? So a trader is obviously going to have a much more detailed plan than what a long-term investor will have. And then the next one, which I think is one of the most key things to determine whether you're a trader or investor, is repetition and volume. Is how often are you buying and selling shares? If you're doing this regularly, daily, even a couple times a week, it's much more likely you're going to be a trader versus a long-term investor. So if you think about it, a share trader could be making multiple trades on the same asset. So for instance, cryptocurrency, they might be buying and selling Bitcoin multiple times a day. They might be buying it here and then they're hoping it's going to dip down there or raise up there, and they're buying and selling, and they're doing lots of bits and pieces. Whereas someone that's holding for a long term isn't going to be doing it as regularly. So I think that's one of the key things to think about in investor versus trader. Then the third thing the ATO talk about here is organization and record keeping. So running a business requires more record keeping. You're going to be keeping track of all your different buys and sells, and also your market analysis. You're probably doing a lot of in-depth analysis that's going to help make that case for being classed as a share trader, not just an investor. And they also look at things like, do you have qualifications in the area? Have you done study in the area? What kind of research are you doing? How much time are you spending on it? All those factors help build a case for being classed as a share trader and running a business of share trading versus just a longer term investor. And the other thing they do talk about is the amount of capital invested. Now, this is probably the least important of the factors, because people can invest for the long term with large amounts of capital. But obviously with share trading, they're going to look at and go, okay, are you putting a lot of money into this? Are you turning over a lot of volume of money? So that is just another factor that could help build your case if you're trying to be classed as a share trader. So as you can see from what I've just talked about, it's really important to get this right, because it's going to completely change how you're treated tax-wise, whether you're an investor or a trader. So look, get on the ATO website, have a read here, some really good examples on here. And if you're not sure, get some professional advice. Go speak to your accountant about it. Get some advice, because they'll be able to help you determine which one you are, and make sure you're set up in the right way so you're keeping the right records, and it'll make tax time much easier for you. And hopefully, like I said earlier, is that if you're an investor, you can talk about the timing of sales and maybe save yourself some tax there. Or if you're a trader, you're going to talk about what business deductions you may be allowed, etc. I really hope that video has been helpful for you. make sure you leave a comment down below on if you're an investor or trader. And if you need help on determining this, make sure you get in contact with me. I'm an accountant, a tax agent, so I'll be able to help you with this kind of stuff. I appreciate you being here. Thanks for watching, and I'll talk to you on the next video.